Hello, everybody. Brian here,
What if you could taste the
quantlabs.net.
movies?
Sorry about that. We're building off of this video here. I posted on my YouTube channel, Quant Labs. Why I switched. Oh, no, we don't want that one. Most recent video I just
Hello,
put up.
everybody.
Yeah. Anyways, this one, unlock Pro futures trading, Rhythmic API, Python, and AI path to HFT. So we're going to continue from that video. Namely here in the this report, this dashboard, we have here the top four that I picked, showing the strongest momentum moving forward as of today on October 23, 2025. So here we're looking at RB futures, which is gasoline, RBOB, and CL oil. I'm not going to look at the currencies here, just focus on these two. Again, RB and CL. So knowing that, I'm going to work with the terminal here in my Linux Ubuntu WSL. So in here, what I've done is if I take you into my secret section, my Quant Elite, go on your quantlabsnet.com, become a member. You can do that. And here, go into groups. And under there, you look for under the specific group, this Quant Leap Programming Group, which is a private one that all my members would get access to. These are the two ones that I posted earlier today. So the first one we're going to look at is the ROB gasoline or RBOB. I'm going to go through some of the techniques here. If you are interested in these secretive techniques, some of the techniques used for trading that the HFT shops would use. Some of these are well known. So they can use all different types of data sets, strategies. They look at things like tank farms. They look at the blooming of these farms and the pipelines from, this case, of Colonial. They will look at startups on license plate tracking. They also will use dark pool analysis from this particular company called Barbican. They will look at all the fill-ups of $75 or more on fleet trucks, SUVs. That's again a hint on directional oil. And what they'll get is a couple of hours to a couple of days before an official release on something. So this is a good one right here. So if you look at this ghost quota layer, this firm, hidden liquidity layer, iceberg orders disguises 50 lot clips, 2,000 lots. So this firm will use FPGAs along here with this. This is the more interesting one. They will use analysis on fan noise frequencies from the CME Aurora data center, and we'll look at and assume that the server rack temperatures can be used as a proxy for order flow intensity, meaning hotter racks, more HFT activity, meaning imminent volatility. So that's what this data set they use. And sometimes these data points can be used as a trading edge. I'll show you some other ones here. So there can be a spread tighten within 90 minutes. So there's a time based on it. Also fractal microstructure models, spread order flow with a Mandelbrot set, familiar pattern, 1 second, 1 hour scale. Another one out of Chicago, Volatility Vortex, RBOB, using this weather gamma creating opportunity along with the refinery turnaround. Dark gamma is another example here. Traded settlement hijacking. I don't know if it's legal or not. And pipelining schedule spoof. Okay. So these are based upon buying up expiring calls as well. Quantum spread as well. They could be refinery runs. Deliverability risk, though, to maximize the opportunity if the RBB contangos. and all kinds of different things. And sometimes it could be an hour, a couple hours before something officially gets released. So they'll have their trading edge. I kind of covered it in my webinar tonight as well in more detail. But this is just one of many ways. So knowing this all fun stuff, you're able to feed this data into, again, an AI and build something with it. I've shown this before. So in my case, if I go into the proper strategies here with RB, again, this code will be available for all my elite members. So in this case, RBX. Okay. So with what I just showed you, there's two things that we can look at. Let me show you the README here. This is now Python. Both are Streamlit, Python Streamlit apps. So here we are using proxy data. Okay, so it's going to be quantum momentum, colonial calendar collapse that was highlighted there, volatility siphon overlay. So it's able to decipher all of this as well as using sklearn, gradient boost regressor, using backtesting data because I do provide it real data. That equity curve, drawdown, annualized stats, distribution, exposure heat map, annualized sharp, Sortino Kalmar rolling beta analyzes the options with a black 76 payoff. That's for volatility siphon and dark gamma traps. Also, there's a different scenario analysis using the SCADA, satellite flare anomaly, and it will use whatever available data there is. Now, I'm just using what I've shown here, one file for this, and everything else is kind of explanatory. All right, so let's get to that. So if I look at the first app here, what you can find here is exactly what those strategies I looked at. That's now again for gasoline itself. So yeah, so here we go. So here, I think I'm not sure if this is going to work or not. Let's see if we'll load in one of the data CSV files. RB, let's see what happens here. So yeah, so it loaded it, no problem. So here's what it comes up with. So it shows you all the trading points. There's 124 rows since July, 4-hour data. There's a portfolio summary of the different strategy types. What we're looking at here is the Sharpe ratio, as well as the Kalmar as well. So these are the historical data for this. Okay. So here we've got this quantum momentum, um, and we also have the colonial calendar collapse. Okay, there's no data there for that because we don't have the data for the pipeline from colonial. If we did, we can always feed that in. And we also have this volatility siphon as well. So here's the date for last year. And you can see here, which is the interesting point, is you got to remember the gasoline price has fallen, but it's more we're interested in the current um, pricing. So let me see if I can pull up my trading view here just for comparative reasons. And I do believe what came out of this analysis is what would be the least riskiest and best performing strategy list for RBOB. So what I came away with was the least risky is this one, the quantum momentum equity curve. Okay. So that's because of just basically the drawdown. Okay. So if I was to show you RBOB here since October 25th, I'm sorry, the 21st, RBOB's moved up. So that's the assumption of why those have better returns. Okay. So if you look at the overall RTD. Now, remember, this is one instrument, so it's dropped back, but it's starting to perform a little bit. the last week. Now, the question is, based upon the momentum that I showed you among all the different contracts, this was one of the leading ones. Okay, so if we look at quantum momentum now with the minimal drawdown, remember looking at that comparison as well on the momentum across all those different instruments. When you look overall on the S&P 500, all the different instruments as an example, and why not gold, why not S&P? The simple answer is simple. So if I was to show you, let's say, I don't know, the ES here, just to show you what's been going on, this is what's been going on over the last, let's say, month. It's gotten very choppy. There's no predictable swings up. So that's why RBOB looked better. Okay. And as for gold, uh, this was this. So in here, we knew this year to date, we had this major run up of gold and we had this 1.7 trillion, $1.7 trillion dollar liquidation on gold in the last few days, like 3, 4 days ago, right here. And it could drop back. This is, from my point of view, clearly manipulated. Probably central banks doing this to spook people from buying up gold, just to keep them out of gold. That's a conspiracy that I would think. There's probably other reasons as well, but nonetheless, gasoline's looking better. We'll just leave it at that. So you have these three different strategies here: quantum momentum. You got this colonial calendar, which we don't have the appropriate data for. That's why it's flat. And this other one, the volatility siphon. Like here, uh, I could use the volatility siphon as well, but I'm just going to show you the quantum momentum. So what I did was using good old AI, I built out another specific um, dashboard using the same data um, to build out this quantum momentum, call it trader. So I can add in the execution when it generates the appropriate signals to trade. I could do it most likely in Python because we have the API for the orders using the async Rhythmic as an example. So here, what we've got is this RBOB quantum momentum trading system. Now remember, we have two data contracts that we could load in. Two different ones. I'll show you two different results. So we have this one here, the RBX5, which was the top performing, and this other one called RBZ5. So these are different time periods in the futures market. So if I load that one in, process, and again, all the source code is going to be available for all those members. So here you go. So it's given 1,000 days. Total return, 7%. Annual return at 20%. Sharp ratio is not great, 0.69. Max drawdown. And the momentum. Here's where it's interesting. So since July, it's moved up using this specific strategy, the code there as well. It also does a comparison of the buy and hold. Okay. So the quantum momentum's kind of performing as well. So it is underperforming, but the thing that's interesting is the drawdown. So this is not performing very well under this time period, but as it improves, starts to move up, the drawdowns start to uh, become minimal, like very tolerable. Okay. So let's see here. It's very, very tolerable. I think under 1% drawdown. So as this starts to move up and we move into the predictable story of gasoline should go up as heating is needed for cold weather as we move into winter. The other thing we look here is the overall performance. You can see here starting January, it started to kind of move up, still volatile. We have here the volatility, which is dropping. Now, when you consider things in crypto and now gold, and now also, yes, the market indices, volatility is starting to go up. But in this case, we're starting to see volatility decline. Okay, that's the appeal of it. And you can see the returns overall are more frequent at, 3%, let's say. Okay, so you can see here, these are the performance of the moods, which is pretty good. Here, detailed performance metric. And when you start to look at the overall We're now at a win ratio of 52%, which is kind of appealing considering the market conditions we're at right now with all the major assets. We also have the profit factor of 1.15, not the best, but it's profitable. Um, we also have here the trading log for those signals that we could use. And moving forward, I use the same trading logic and the same code to apply it for live trades moving forward with Rhythmic. And here's some components here detailing this strategy. So it's trying to mimic what was in that article here as best as it could using this one right here. Well, it was called the quantum spread right here. So it's trying to use this data as best as it can to make what these firms are doing. So it's kind of done it with all these trading rules here. Okay. So it's here the position sizing base signal, volume multiplier times the volatility adjustment capped at max position. So that right there is your trading logic, your trading rules. And that's something unique most people wouldn't know. But the AI did its best to come up with a signal generation for this particular strategy on gasoline over this moment of time, probably the last month. So you can continue potentially to use this strategy as is with potential profit, hopefully moving with, as I said, the stronger momentum as I showed in the very first dashboard. So there's that. I mean, we're not getting the great Sharpe ratio 0.69, not great, but it's not bad. And the volatility, I mean, it is coming down. You can see here. The other thing that is interesting is that there's virtually no volatility right now. As I said, if you look at Bitcoin, gold volatile or potentially could be volatile, along with the ES, this could be something interesting to watch. So the other thing that might be of interest is oil, a very big instrument to be traded in the futures futures and options market. Let's take a look at what the AI revealed for oil. Okay. So go back into this group there. Quantity. So here's oil. This went up this morning. So here we have things, death of the public alpha. Okay. Um, so it's looking at pipe flow estimating, AIS ship transponder, refinery turnaround from Texas. We've got the Houston wiretap. Okay. Fully detailed here. Frac sand hack, the DOE leaks. Again, it gives you the specific kind of number of contract buy, when to buy, how to buy, microstructure, co-location, cartel. Again, that's always in the Aurora data center, as you've seen. Now, this is where it gets interesting. This is found, this particular trading was done with jump trading. So it specifically tells you who did this trade now. That's the interesting part. Using their Shiva platform. And it gives you the exact details on what they're buying, the size, and how they're doing it. It's really interesting. And we have the cross market latency. This one is what was it? Tower Research Alpha exploits this. The NYMEX versus the the Brent latency. So they figured this out between Aurora, Ice, Basiladon, UK data center, with a secret. Oh, look at this. Look at this. This is crazy. Secret Hibernia cable splice under the Atlantic. They detect CLBZ spread dislocation 1.2 milliseconds before the market. Before the market. That right there is their opportunity. 1.2 milliseconds before the market officially catches it. That's how they do this at a very split second basis. Buy CL, sell BZ, hedge with the USD Canadian futures on IMM. Sharpe ratio, it gives a Sharpe ratio as well. 8.3. Check this out. Now we have Optiver, gamma scalping. We've seen this enough over the last number of videos if you've been watching this. swap data repository, maps dealer, short gamma zones, engineer spot moves. Okay. Very powerful stuff that we get here. And we also have here the volatility vault, creating oil options like casino owners. VIX oil, phantom order, OVX, the oil VIX. Now, look who's doing this. Citadel, OVX shadow, a volatility index using dark pool prints. That's the secret stuff I've talked about, the data set. Here, we're using ICE, name of the data feed, PMC, and the CME Clearport data feeds. To find out the cost of that, if you had access to this in the Aurora data center, you could trade this. And if you're willing to pay it for the data, you could trade this, knowing this. Okay. Again, off exchange block trades, 50,000 lots, CL calls bought at 25% delta, dealer rebalancing flow, scraped from the Tri Optima UR and our margin call. So here's what they do. OVX shadow futures to pension funds at 35% volume while buying CL straddles 28%, 7-point arbitrage is riskless. I don't know if that's still happening, but this is the sort of things that these firms do. So we've already looked at what Citadel's doing. We've looked at what Optiver's been doing. And we looked at what Jump Trading's doing. These are actual real world trading firms. So here's another firm as well. Refinery data outage. CFTC hack. WhatsApp pipeline. This is an interesting one. We can have access to WhatsApp. Former Triana broker leaked block trade details via WhatsApp voice, encrypted, screen recorded by a quant analyst. So this is probably questionable, probably even illegal. The fund built a flow predictor because of the data leak from this analyst here or the broker. Okay. Profit rate 68% over 200 trades. So that was done probably illegally. Here we have Citadel spinoff spammed 100 lot CL option orders every 15 milliseconds to inflate the open interest. So that's clear manipulation right there. Bought 10,000 CL futures to trigger delta hedging, sold the calls to unsuspecting momentum algos, that could be you and me, and so on and so forth. So here's something that what they try to do, these operators, these HFT firms, they try to do things that the SEC and the CFTC, the regulators, don't see. So here we have ICE Futures Europe, blah, 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 FCA, not CFTC. And they just do questionable things. The Cayman shell game, E-mini distraction, blah, 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 blah. It just goes on and on and on. All right, so let's check out what came out of that with the coding for oil. So let's go over to oil. All right, so we have the same thing, but we have got now two strategies we can look at. The first one is the run APE. So again, all of this I'm showing you is from AI. Different AI. Specific ones we're looking at are the AI upload a. Okay. Here we go. So here we have 4 different contracts to choose from. Okay, so the CL could be right here, these 4 different ones. So let's choose that one. All right. So it's going to load it, 21,473 rows. Okay. So now we have those 4 major strategies: estimate trend, breakout, mean reversion, gamma pulse combo. Again, this is just using it off of pure price and what we have available through the exchanges off of one data set, one CSV. Okay. So what's the best performer? Looking at this, we have here gamma pulse. And in this case, gamma pulse is the best performing on equity curve. Okay. So let's look at the rolling sharp. Well, here we have the breakout all of a sudden since that moved up since September 5th. So that's the best performing on the breakout. Okay. Also, we have special notes. If anything, well, we can add these if we want, but we have enough to work with. All right. So again, you can play around with the different parameters. I just don't bother. I just leave it. Um, okay, so if we want to multiply, maybe adding in the leverage, we could do that. If we add in up to 6 time leverage, let's see here. Let's say if we put in 6, what would happen here? That's typical standard. So you can see here we get totally different results now. We've got this mean reversion, which would kind of make sense. SMA trend's not doing too good. Breakout and this gamma pulse is still doing okay. Now, this is timing all the way back to May 30th. So we know we still have breakout doing a-okay. All right. Um, so here's a couple of other things we need to factor in is the max drawdown. As you know, I don't like to go with max drawdown of more than negative 15%. Here we have max drawdown of 48%, probably probably earlier. See the equity curve. Yeah, you can see probably right here, that drawdown right here back in April. Yeah, it was probably during the liquidation, liberation and the markets tank because of Trump on that tariff liberation day thing. So that's quite possible. So coming back here, max drawdown, the best one's looking kind of like the gamma pulse combo. You can see here the win ratio is quite good, 45%. Volatility is kind of still tolerable. It's a little high in my books. But if you don't have volatility, you don't get performance as well. So that's something that needs to be considered as well. All right. So again, we're using leverage. We'll keep it at 1. Keep it safer. I would never use leverage unless you know for sure everything's but this is much better. So everything's becoming much more manageable. Gamma, negative 13, and the breakout's even better at negative 8.7, which is pretty tolerable. Still, the gamma pulse ratio, win ratio is pretty good still. I mean, a little low on the breakout. The volatility's decent. Gamma pulse at 20%, 14 or 15% for the breakout. All right. So that's all fine for this one. So the gamma pulse combo looks probably the best one right along here. Okay. So let's take a look at the next one. Got so I looked at this one, or I'm sorry, that's the overall different strategies. Let's say if we just zero in on, in our case, we have 2 different ones. We have the gamma pulse, so let's check out that one. Okay. Okay, so we have the Streamlit gamma pulse. Let's check out that one. So here, um, loading our data. Okay, so I just want to give you a highlight of which strategy works best for CL oil. So I'm going to show you the 4 different ones, 4 different CL futures files, import CSV. So the first one we can look at is this one right here. Okay. Okay. So in here, we have this AI result built out a typical buy and hold. So if you didn't do anything, this is what it looks like. So even if you just ran this gamma pulse, you'll still get some decent outperforms up until May of this year. Then it started to drop. Okay. So here's the interesting thing on the daily returns. You can see it's more negative. Bulk of it's more negative, less right tail in a certain circumstance, which you really can't predict. Now, there's not enough data for a walk forward. I could probably go farther back 3 years if I want, but just to show you generally how I look at this now using with the Rhythmic futures data. So there's that. Okay. So it still outperforms. The max drawdown's kind of high now. Okay. 25%. Win ratios dropped. Buy and hold still outperforms. And the profit factor has also dropped off too. So profit factor 1 is not great. Okay. So trade return, if we just continuously trade this, we'd still outperform uh, buy and hold with oil, but that's declining. So not the best. Okay. And that equity curve is not very strong with this particular strategy. So we'll leave it at that. So the other one I've got here is the breakout. So we're looking at this one, CL breakout. Okay, let's load that one up. This one's a little better. So you can see what I'm doing here is I'm able to determine what strategy I want based upon timing, based upon all the portfolio metrics on back testing. As I said before, you just need the file. You don't need to do any crazy back testing to build it out manually. You can get the AI and use the AI itself to be able to do that heavy lifting for you. So here we've got, again, similar amount of rows, 21,500, which is quite a lot of data to work for. But you can see what's going on here with the breakout. It's declining, right? So not doing too good. Okay. So here the returns probably aren't that good on a daily basis. Max drawdown still kind of high. Volatility, eh. But here's the interesting part. If you did a buy and hold, that's your volatility. But if you did the breakout strategy automated, you would get a 20% volatility, but yet you get a higher win ratio with the buy and hold, which is quite interesting. But you can see the volatility right there. It's more mean reverting than anything else. There's no trend here. Um, so the profit factor is actually a little higher with the buy and hold. Okay, that's fine. But this is where it gets kind of interesting. So if I know it's not the best, but if I now load in a different future contract for it, um, so this one here, okay, now let's look at the size of it, 2.4 meg, okay. Those will be similar to what you've seen. Just here to reset everything, and let's reload that file. So CL right here, boom, there you go. Okay, so how much difference does this make? Volatility much higher with the buy and hold, lower. Same win ratio, same issue with this contract for this particular future contract. So nothing exciting there, but this might change things based upon that data size of this particular file. So here you got 2.4. Now we're dealing with a 5.4 megabyte file. Okay, and this is for 2025. These two are recent activities. So these are closer to potentially expiry closing. Let's see what happens here. So you expect to see more activity here. That's why it's bigger. Let me just make sure I get the right results here. So we're going to load that third one. This one right here. Okay. So here, max drawdown increases. Okay. That's still pretty steep. Win ratio, buy and hold 50%. Yeah, see, this gets worse. It's starting to perform right here. Right. So here, not much to look at. Um, this is tough to say if you start to see this might be going through some form of a bottom. But we've seen this as well. But you can see here this strategy could lead to it's probably high risk. That could lead to this kind of performance on potential breakout right here. I don't know. It's kind of risky if you ask me. But it's interesting to watch. You can always set up an automated program script that will watch this against the data. And if there are enough signals, it will generate it. So here, I think it should talk about the rules. No, it doesn't. But if you ask me, the gasoline might be a better one, lower volatility, better equity curve overall. I don't know if that's short lived or not. I don't know. That's kind of what I'd go with. It's lower risk as well because the performance, the cost of the instruments, not, it's like $2 versus like $52, right? Or $60 on oil. So interesting that you can do this with this AI. Be able to use raw data files. Let me just load the last one and be able to determine not only a strategy, but call it secret sauce, institutional type of strategy that we never heard of. Feed it into an AI, come up with actual working code on all those algorithms and generate it. Then we can take a look at the analysis and sort of like say to ourselves, well, let's take a bet on it. Let's see what happens. And so we want the last one here. So we want this one. Yeah. Okay. So let's take a look at this one. So here we go. So again, these are the notes. Okay. Again, you can find the trading logic through the source code, reverse engineer it. All right. So you can see here the prices are a little lower than 60. You can see here, this is where it gets interesting. So this started to move since October, and it's still moving while the buy and hold is declining. This is where it's hard to say what will happen, but if you knew about this, you could probably run this 24 hours and just instead watch the signals and let it automatically trade. But it's definitely outperforming buy and hold, which is better. If that's you're willing to take the risk on to trade oil as is under these this particular strategy. And again, when you start to add in leverage, let's say 3 times, right there, it doesn't really do a lot. It's not worth the risk, to be honest. Yeah, it doesn't do a whole lot. But we'll leave it at that. Okay, so some very, very good examples of what works even in a down market. As well. So if you like this, just go over to quantlabs.net, just load her up, and yeah, you can go in and sign up to our newsletter. Get a free C++ HFT infrastructure ebook. If you want to try our service or get some of the analysis done, you can always try it right here for 7 days. And if you want any of the plans, as I said, the source code will be uploaded the next day or so, what I'm showing you, plus others as well. These are the price for the Quant Elite. This will go up as well. We will have a sale coming up, just so you know. And then we have a regular Quant Analytics service per month as well for that private group as well. All right, that's it. Thanks for watching. Have a good day.